Uh, Gold. He loves gold and silver. Authored by Simon Black via sovereignman.com. I've read some of his stuff from time to time. I sign up for his newsletter. It's free. I'm not sure. I think he may even have a paid one, but I like it. His free stuff is good. Why the Barrick gold deal could mean the mega melt up is here for gold? Excusez-moi. In 1986, Peter Monk bought a gold mine in northeastern Nevada for $62 million. The mine was only producing 40,000 ounces of gold per year back then, which is about $16 million annually. And the sellers believed the land held 600,000 ounces easily mineable of easily mineable gold. 600,000 ounces. But those estimates were woefully short. By 1992, the mine yielded 1.1 million ounces of gold. Today, the mine, known as Goldstrike, is the richest mine in North America, producing over 2 million ounces per year, and it has reserves of over 21 million ounces of gold. Now, can I just tell you a little feeling I got as I read that to you? What if some of this gold we're not supposed to know about, maybe Bix's Grand Canyon gold or just some other stuff, and Barrick Gold is, even though it's a real gold mine, they're laundering gold from elsewhere through this place. Then again, it could be gold from other countries, South American countries, slave labor, and they're bringing it up here to pretend that it came through Barrick Gold, offering them a discount, smuggled gold, and then Barrick says, yeah, we got it. Just a thought that came in. That's all it is. So yeah, by 1992, the mine yielded 1.1 million ounces of gold. Today, the mine known as Goldstrike is the richest mine in North America, producing over 2 million ounces per year. And it has reserves of over 21 million ounces of gold. Although the Goldstrike acquisition proved to be the best, Monk bought many other successful gold mines. He was the founder of the world's largest gold producer, Barrick Gold, and his company earned the top spot through deal making. Before buying Goldstrike, Monk bought half the Renami mine in Ontario, then the Camflo mine in Quebec. But it was Barrick's 2005 acquisition of Placer Dome that gave the company its title as the world's largest gold producer and cemented its place at the top of the food chain. It's been over a decade since Barrick's blockbuster deal, and the gold sector has gone quiet. Low prices for both the metal and mining stocks cause investors to completely ignore the sector. But the commodities markets are cyclical. As our friend Rick Rule says, the cure for low prices is low prices. And we're starting to see signs of life. We've been writing about a number of tailwinds for the yellow metal, including a lack of major discoveries, which we argued would lead to higher gold prices and frenzied takeover activity as gold demand increased. Well, the gold price has increased from 2018 low of $1,175 to $1,340, a 10-month high. And we're starting to see M&A, or merger and acquisition, activity among the largest miners. Barrick made headlines late last year when it announced it would acquire Rand Gold Resources in a $6 billion deal. It was a major sign of life in a sector that was, well, left for dead. Then in January, another mining giant, Newmont, announced it would buy Goldcorp for $10 billion. But last week, we got a sign that merger mania in the gold sector is officially on. Barrick announced its intention to make its largest acquisition yet, a $17.8 billion deal for Newmont Mining. Newmont rejected Barrick's offer and intends to pursue its merger with Goldcorp. Barrick is turning its bid hostile, and the miners are publicly trashing each other, with Barrick calling Newmont desperate, and Newmont is in turn calling Barrick inferior. But despite the theatrics, this deal tells us one thing. The gold sector is gearing up for a spate of merger and acquisition activity. We're seeing the largest companies consolidate first, They're merging to try to further cut redundant costs and bolster reserves. Gold companies have been slashing costs for years to improve margins in a down market. But these mergers don't solve the problem of no major new gold discoveries in the past 15 years. Next, we should see the gold giants start acquiring the junior mining companies. As the name implies, these companies are much smaller, and they raise equity capital to find new gold deposits. These juniors take the big risks to find new deposits, and the successful ones see their share prices soar or get acquired by a larger miner, or both. It's not just the economics of the gold sector that make an M&A boom likely, merger and acquisition. We saw record M&A activity across the board last year as cheap money and record profits sent companies on a buying spree. And we've got the same backdrop today. The Fed and other central banks around the world have already backed off their plans to tighten monetary policy. On its own, monetary easing, the continued destruction of fiat money, and record debt around the globe make gold an incredibly attractive asset class. Can I add something real quick? You guys watched the Max Kaiser video? It's been 2 or 3 weeks now, where he said, look, the central banks across the planet bought more gold in 2018 than ever before. Ever before. Why are they in a buying spree all of a sudden in 2018? I wonder if the United States is going to have a gold-backed currency in the not-too-distant future now that we got Donald Trump as our president. And gold is going to be priced quite fairly because of all the debt that's out there. And guess who's going to go with it? Its little brother, silver. And that's my favorite coin, or type of metal, I should say. I do like gold, but I'm a silver kind of guy. So it's saying, on its own, monetary easing, again, the continued destruction of fiat money, and the record debt around the globe make gold an incredibly attractive asset class. But in this coming gold bull market, low rates and an excessive appetite for debt will also continue fueling the gold company merger frenzy. The stage is being set for a mega melt-up in gold and gold stocks right now, and we continue to be quite bullish on the sector. And to continue learning how to ensure you thrive no matter what happens next in the world, I encourage you to download our free Perfect Plan B guide. Because if you live, work, bank, invest, own a business, or hold your assets all in just one country, you're putting all your eggs in one basket. You're making a high-stakes bet that everything is going to be okay in that one country forever. All it would take is for the economy to tank, a natural disaster to hit, or the political system to go into turmoil, and you could lose everything. Your money, your assets, and possibly even your freedom. Luckily, there are a number of simple, logical steps you can take to protect yourself from these obvious risks. And that's a little plug for himself on his own site there. So I'll link to Sovereign Man. And we'll see where this goes, right? I mean, gold and silver have been, slowly creeping up here in recent times. And usually they get hit back down. And seems like they've been holding. Let me take a look, just out of curiosity. What kind of price do we have these days? Gold, 1328, as in 1328, and silver had a high today of 16 bucks, low of 1572, current price 1588. Last time we saw this kind of stuff happen, they slam it back down. And you know what? Maybe they will slam it back down. But quite a few people are thinking, maybe not. Or again, if they do, are their days limited? The days numbered? Is the central banks and the banks getting ready for this? Again, JP Morgan acquiring all that silver over the last several years. Enormous amounts of real physical silver, not the fake paper crap. Contracts, no, real silver. Why do they want all that silver for? The banks know well in advance, because typically the banks are the ones that run the country. The banks typically tell the government what to do. And obviously, you could honestly see this coming from a mile away. It's just a matter of, when. Remember, I started buying silver in 2007, I think was my first year. And 2008, I was buying more than, I could play a paper contract. And I would have to own the stuff, little dips. I get the little fake, here's your fake account. Play with it. I'm making money almost daily. Silver. Let me do the real thing. Start playing with it. Hey, it's working. But I'm like, there's other commodities here, right? So I was playing with corn and wheat. Like I said a million times, I read this story. Wheat prices are skyrocketing. I'm making all this money in these little future contracts. Not that I was making a lot. I mean, I was playing the mini futures, but I'm like, well, I can do this. Cool. And then I'm hearing these stories, people in line in Egypt killing each other over bread because they're low on bread, subsidized bread, and the cost of wheat so high. People are like fighting and killing each other in the line. I'm like, am I contributing to that because I'm playing these little futures contracts over here? Didn't like the way it made me feel. I'm getting out of that. Oh, silver. Let me play with silver. I got physical silver, but I can play this margin game. Okay, what's that? I get cleaned out. I start with like, I don't even know what I started with, but I was up maybe not $1,000, and I just started, but I was up, hundreds of dollars, and then bang, $20 or $21 silver gets knocked down to 17, gone. Margin call, you owe us $500. Wait a minute. My entire account's wiped clean, so all the profit I made plus the initial deposit's gone, is what you're telling me. Yes. And I owe you $500? Yeah, we need it today. Okay, I'm not leaving work to go rush to the bank today, but I'll make sure you get it within the next few days. And I had to go to the bank and wire in $500. And guess who was behind it? We know who, JP Morgan and the boys. So, wake up call. But even back then, I learned and remembered all this time, you need to have some precious metals. You do need to have some. Because one day they'll break out again. Again, they are cyclical, just like all markets. And I've been, again, this whole time, even with cryptos, man, if Litecoin gets under $99, I'll buy it. Maybe I'll sell some silver. And then, no, you won't. Yeah, but man, it's $50. No, can't touch my silver. Don't touch your silver. Couldn't touch my silver. Had to leave it alone. So I'm hoping one of these days here in the near future, prices really run up nicely. Remains to be seen, but whatever. Take care.